When we were together last time, of course, we started into our discussion of the fulfillment process, and in particular, we focused on the organizational data aspect of the fulfillment process, and we talked about the sales organization, distribution channel, division, sales area, um, and then wrapped up our time last time talking about the credit control area. Just by way of kind of review and recap and such here, let me ask you a couple of questions. If we look at this list, and I'll make sure I get everything on there, okay. So these things right here in particular, why do they exist? Why do we have them? What do they do for us? What's that? I see some people that look like they might know some things. I see some other people that, yeah, why do they exist? What purpose do they serve? Okay, well, sure, but we could get the product out without having all four of those things. I mean, why do we need all of that? Why can't we just have a sales organization and call it good? Meaning what? Say more about that. Okay, now the how it's distributed part, I think that falls more to these two guys right here, or really these three guys right here: the plant, the storage location, and the shipping part. Shipping point, that's definitely the getting it out, so to speak. Yes, sir. That's a big part of it. A big part of why we have this is for tracking and analysis. It gives us a way to, instead of looking at our sales as just one set of things, it gives us a way to come in here and be able to cut that up and look at what's going on in particular domains to try and learn a little bit more about it. Yes, sir. Absolutely. So this gives us a way of also, if you will, differentiating strategies, which brings back to the point that was mentioned a moment ago. One element in our strategy is going to be prices. So we can have, remember we talked about conditions and how we can create conditions that really are just a whole set of rules. And we can create rules associated with how things work in a given distribution channel versus a different one, and one division versus another division, and a sales organization versus a sales organization. So all of this is about giving us the ability not to view all of our sales as just one big conglomeration, but it gives us a way of carving it up. And if you think about it, if we look at it this way, distribution channel gives us a way of carving it up based on, as was mentioned a moment ago, how it's distributed, meaning on the internet, wholesale, retail, catalog, or whatever have you. We can carve things up that way. Division brings us more into things related to the product characteristics itself. So is it this category of product or is it this category of product? And we can kind of carve things up in that fashion. This is also great for, and it kind of goes with this idea of strategies. In our organization, it gives us different ways of assigning responsibilities and tracking how well people and entities are doing within our organization. Maybe our West Coast division, or excuse me, maybe our West Coast sales organization is not doing as well as our East Coast sales organization. It also gives us nuts and bolts things like if we want to have some kind of competition among the different sales organizations, we can do that. So we have a way of cutting things up for the sake of facilitating analysis. Keep in mind that organizational data in general is all about being able to keep track of where things happened and who's responsible for work that is being done. And so this is an illustration of that. And we have different types of organizational data that are relevant for us here that are based on different tasks that are part of the fulfillment process. Some people are focused on the actual selling itself. Some people are focused on shipping the product out and getting it distributed. Other people are focused on granting of credit. Other people are focused on recording the accounting implications. All of that has to happen in a coordinated way for our organization to operate efficiently. So this is what we talked about when we were last together, the organizational data impact and aspect of the fulfillment process. So any questions or comments about that before we forge ahead here? All right, so last time we talked about organizational data, so it seems kind of fitting to me that this time we will get started in our discussion talking about master data. And so what is the master data that is relevant to the fulfillment process? Well, it should be of no surprise to anyone in here that the material master is relevant because, surprise, surprise, we're selling stuff. And stuff has a material master associated with it. So we'll see that and we'll talk a little bit about that. We're selling stuff to businesses. So we have a customer master data record that's going to store the information about the customer who is purchasing for us. Those are really pretty obvious to me. Then we have something called the customer material info record that we will talk about, but it's kind of worth noting that the name of that really is pulling from the first two items on our list here, the material master and the customer master. And then we have three other things. We have the condition master. We were talking just a few minutes ago about pricing. The output master, which we'll talk about what that does, and then the credit management master record, which we actually referred to last time as being something that is created and maintained by the credit granting portion of our organization. So this is what we will start talking about today, and really just focus on, for some of these things, what is new or notable about it for us in the context here of the fulfillment process. So, material master, we already observed, it's obvious that this data record is part of the fulfillment process. Remember, we talked about how this is segregated into different views. Well, one of the views that's relevant for us here is the basic data view. That's where we're going to see the material number, the name of the material, and basic facts about the material, including perhaps the weight of the item, maybe dimensions of the material, whatever would be relevant in the context of our organization. Things like how we sell it. Do we sell it by the unit, by the dozen, by the pound, by the truckload? What's our unit of measure associated with it? We have a sales view in our material master that is really tied closely to the sales organization. So a given material might have one material master record, but depending upon the sales organization that's selling that product, the sales organization view might be slightly different for the same material for different sales organizations. This is specific to not only the sales organization, but a given distribution channel. So you can kind of think of this as being very closely related to several of the elements in the sales area. This is going to include things like the delivering plant, things like minimum quantities. Let's talk about both of those things for a moment and why this makes sense. The West Coast sales organization sells on the West Coast of the U.S. Their plant is in San Diego. The East Coast sales organization, surprise, surprise, sells on the East Coast of the United States, and their distribution center, their delivering plant, is in Atlanta. So that's what this gives us the ability to do. Now, it could be that the plant in San Diego that's on the West Coast sells this particular material, and because of the equipment that they use, they sell it in boxes where it comes 25 to a box. So customers buy it by the box. Well, on the East Coast, we also sell it by the box, but our equipment's a little bit different. So our boxes on the East Coast only have 15 items in it. Well, this is how we would differentiate that based on the delivering plant, and then we could have rules related to minimum quantities that might be reflective of our packaging, or just the smallest amount we'd want to sell. You know, you would not want a customer contacting you and the Heinz organization and saying, I would like to buy a bottle of ketchup from you. You know, you want to sell it in terms of maybe a tanker load or a pallet or something else of that sort. So this is where we can set those limits. And this gives us the ability to differentiate that for different sales organizations. Remember, one sales organization might have the ability to sell on the internet. The other sales organization only might sell wholesale. The packaging could be reflective of that, as could things like minimum order quantities. The purchasing tab is relevant for us here for the sake of materials management and the plant. Now, I have a big question for you here. We're talking about the fulfillment process. Why would the purchasing view be relevant if we're talking about the selling process? Can somebody explain this to me? Okay, but this isn't focused on the finance of that. That's going to be someplace else. Okay. Okay, it could be. Could be. I don't know that that's the main driver here. You're headed the right direction. Okay, tell me more about the nature of trading goods.
Trading goods are generally purchased and not, there's no production associated with it, it's purchased.
Okay, so would we all agree that for a trading good in particular, I could sell it before I have it? You know, I could sell it to you today and the shipment doesn't come in until Monday, but that's still going to be fine because I don't have to deliver it to you for another 2 weeks anyhow. So the purchasing aspect of this is important because it tells me when things are coming in, where they're going to be when they do come in. It enables me to manage my materials from a time frame perspective. In ERP Sim, you might recall, and we'll talk more about this later in the semester, you operated a make-to-stock company, which meant you only sold out of inventory. And that worked great because of the nature of what it is that your company did. Well, if we're Amazon, we can sell things that we don't have in stock, but we know are coming in. And that can be a perfectly acceptable part of our business model. As a matter of fact, that was one of the things that Amazon realized very early in the life of its business. When Jeff Bezos founded Amazon, one of his goals was to be like the bookstore that would have everything that anyone might want. And he set a goal that he later came to regret. But his goal when he started the company was to get to having 1 million titles. And at first, he thought that meant having 1 million book titles in inventory in our warehouse. And he very quickly realized that that was just not feasible at all. And so he negotiated arrangements with various book publishing companies whereby he could place an order with their distributors and the distributor would deliver to him the next day. And therefore he could ship it out to the customer in a very timely fashion. And that was really one of the strategic things that Amazon did very early in the life of their company that allowed them to be successful and profitable, because they could take orders from customers, fulfill them very quickly without having to have the item in their warehouse. Well, if we're going to do things like that, knowing when things are happening in terms of our purchasing of a particular material, going to be very, very important to us. And then we have the ability and the need to track our materials in a sales context, in the context of a given plant. You know, so this is where we're going to have things like inventory information and such that's going to be differentiated. And you saw that in one of your recent lab exercises where when you were done moving materials around, you could look at inventory levels in different plants and storage locations. So obviously that's going to be important to us in the context of the material master. So that's kind of all there is to say about that. We've talked about the material master extensively before, so I don't think we need to belabor any of these things, but understanding the role and importance of this in the material master is a very important item for us. Questions, comments about any of this? All right, well, rolling right along here then, customer master record. We see something here in selling that is very similar to what we saw in purchasing. And that is that our customer master data record is segmented into 3 different parts. We have the general data about our customer that's universal across the entire client. It's valid across all company codes, and this would include things like the customer name, the name of the company, their account number, and very basic facts about the organization. It might include things like addresses and phone numbers and things of that sort. These are the universal set of facts that we have that we all share whenever we reference this organization. Think about the utility of this now in the context of credit management and how it enables us to track credit more easily across multiple company codes because we're all using the same account number and name to reference a customer. As an aside, I might have mentioned before that one time in the past I worked for a collections department inside of an organization. And one of the things that we had to be very careful about was when we had a customer who owed us money and was very past due but wanted to buy more stuff, and so they'd try to open another account. And they'd tweak the name of their business. Sometimes they could use an alternate address. And we wanted to watch out for that. If someone already owed us $500,000 and wasn't showing signs of paying us, we wouldn't want to ship them a couple $100,000 more. So the fact that all of our organizations and our entire entity can work from this same set of customer names, account numbers, and addresses affords us a bit of protection there. Well, financial accounting can't be universal. We know that financial accounting has to be done based on individual company codes. So once again, when a given company code looks at a customer master data record, they're going to see the financial information about their relationship with that customer. So if you think about it, that means that credit management has to be handled somewhat differently because the customer might owe company A $50,000. And company A knows that, but that's all they know. Company B, the customer owes them $150,000, and company B knows that, but company A has no way of knowing that. So one of the things that having credit management handled as a separate process allows us to do is it kind of gives someone the ability and the authority to look at accounting information across company codes to monitor our overall exposure and to unify our strategy here and to protect us. Sales area data is specific to sales areas, and this is certainly a focal element of the fulfillment process, and it goes back to what we were talking about before. This gives us a way now to chop up the customer's transactional history, look at what they're buying from us in regards to different distribution channels, different sales area or sales organizations, and different divisions. And so this gives us the ability to do that. This diagram from your textbook looks a lot like what we looked at when we were talking about the vendor master data record. The only thing that's different here is this was not sales related. When we were looking at the vendor, this was purchasing related and had a different element here. But the general data, client-wide, universal, shared by all. Accounting data is specific to a given company code, and then sales area data is going to be differentiated by sales area. Other things that we will see on the customer master data record, the general data, some of this I just mentioned a moment ago, things like the account number, the address of the customer. company code data, there's one element here that's worth us talking about a little bit, and that is this is where we're going to see the reconciliation account. Now, reconciliation account in the context of fulfillment is going to map to what kind of account in the general ledger? A receivable. This is going to map to a receivable account, and what kind of account is a receivable account? It's an asset, absolutely. So this is going to be an asset account, but unlike assets like equipment, which get mapped into an asset class and mapped to a general ledger account, our customer records are going to be mapped to a reconciliation account, which gives us the ability to perhaps have different receivable accounts. We could have wholesale receivables, retail receivables. We could have other ways of organizing our receivables and map different customers to different reconciliation accounts. Payment terms and the way we communicate with the customer about what they owe us is going to be included here on a company code by company code basis. So example, some companies might sell to, or some company codes might sell to a given customer on terms like 210 net 30, where other company codes grant them different payment terms. That's acceptable, and the company code data aspect of the customer master gives us the way to do that. The sales area tab that we were just talking about, the sales area aspect, has a lot of stuff in it. What's the sales area? What currency do we sell to that customer in? What are our prices for this? And this is where we can see condition records, references to conditions. Who delivers to them? How do we prioritize this customer? As an aside, there's a very interesting and when this was first being discussed, somewhat controversial aspect of the newest version of SAP S/4. It allows companies to prioritize customers and to make changes on the fly to how things are done to better meet their business goals and have the system automatically adjust. What do I mean by that? Well, let's say a given customer, we'll call this customer number CC123 is their account number. And let's say this customer on an annual basis buys about $10,000 worth of stuff from us. And then we have another customer, CC987, and on an annual basis, they buy about $10 million worth of stuff from us, okay? Well, we sell, I don't know, what do you guys want to sell? Pancakes, okay? We sell frozen pancakes because it'd be kind of hard to sell fresh pancakes, but all right, we sell frozen pancakes. We are a gourmet breakfast food, and I wouldn't mind a stack of gourmet pancakes right about now. All right, so this right now we have 10,000 boxes of pancakes in stock, okay, and we got an order. We got this order a month ago from customer 123 where they want to buy 8,000 boxes from us. And they've told us that we have to deliver them to them by November 3rd, okay? And we're getting ready to ship that out. Everything's good. We have 10,000 boxes. They want to buy 8,000, and so life is good. And this is the customer CC123. Well, we get an urgent phone call from customer CC987, and they say, we're having a special event we weren't really planning, and we really need 10,000 boxes of pancakes by November 3. Now, the way this operates traditionally in SAP ERP is something we'll probably talk about a little bit later called available to promise. Available to promise, which is also abbreviated ATP. Well, under the rules of available to promise, the way most organizations would operate when customer CC 987 called us up and said, I need 10,000 boxes by November 3rd, we'd have to say, we don't have them. We can ship you 2,000 boxes, but we've already obligated ourselves and we only have 2,000 boxes available to promise. Well, a lot of companies kind of don't like that. They would like to have a little bit more freedom there. So ironically enough, in the newest version of S4, if we started keying in this order right here for 10,000 boxes, the system would basically reply and say, you don't have those available to promise. Would you like us, and this is not the wording it uses, but basically it says, would you like us to find those 10,000 boxes by rearranging priorities? And in that case, the system would look at it and say, wow, this customer right here buys a lot less from us than this customer right here. Let's bump this order and divert the product to the higher priority customer. Now, you might say, well, that doesn't seem fair. And sure, in terms of fairness, it's not fair, which rubs a lot of people the wrong way. But who would you rather tick off? Your $10,000 a year company customer or your $10 million a year? And so we have the ability here to think in terms of prioritizing customers. And by the way, the suggestion here would be that we call up our customer 123 and we apologize and we tell them we can have it to them by Friday instead of Monday, and we'll give them a discounted price. But we'd rather do that than run the risk of hurting our relationship with our higher profile customers. So the sales area data portion of the customer master is going to equip us with information that we could use to prioritize customers. This used to be done in the context of what was pretty crude, just what's called ABC analysis. And ABC analysis basically just calls for us to rank customers in terms of category A, category B, and category C, and then you prioritized accordingly. And typically you would decide who's an A versus a B versus C based on some rules you established related to sales volume. Well, what I'm saying here is that the newer versions of SAP can actually take this job away from you altogether and give you something much more refined than the crudity of just ABC analysis. So the customer master data record is going to be a real driver of that. Shipping as well, we're looking at things related to tolerances and partial deliveries. Remember, on the buying side, we could create tolerances for under delivery and over delivery, and we also could create rules as to whether or not we accept partial deliveries. In this case right here, I don't have any partial deliveries, but let's assume if we go back to this scenario and we say that both of them wanted 8,000 boxes. Well, we might route the full 8,000 to CC 987 and then ship the 2,000 that we still have left to CC 123 if they'll take partial deliveries. And so that might be acceptable to them, it might be not. This is where we can actually record that in our system to know what the customer's preference is. Tolerances, remember, also allow for over delivery. So if we have some units in inventory that we're really trying to, close out stock of, and a customer will take over delivery, we could plan to do a little bit of that as well. Billing, terms of sale, what's the term that we used for this previously? What's that? I think I heard somebody mumble it. Blah, blah, blah. Yeah, Incoterms, very good. Incoterms is really what we're talking about here. And then also tax. This can be really, really fun if we're talking about rules related to sales tax, for example. For example, some of you might have experienced this. If I am selling to a customer in another state, if I do not have a presence in that state, I probably don't have to collect sales tax. But if I do have a presence in that state, I do. So keeping track of the tax rules related to selling to a particular customer is a part of their customer master data record. and partner functions we'll talk about on the next slide here. Keep in mind that a given customer can be served by multiple sales areas. So we can have different rules related to these things as it relates to one sales area versus another. Maybe, for example, one of the sales areas is wholesale related, the other is retail related, and so that changes the tax rules, hypothetically. And so we use that element of the customer master data record to reference that. Partner functions, we talked about before in the context of our vendors. It comes up here again, and it's worth spending a little bit more time talking about. What partner functions particularly do for us is allow us to recognize that thinking in terms of a company having just one physical place of operation and having just one address is really not reflective of the complexity of reality here. We also see some unusual situations that we'll develop a little bit further where you could have one address and one business that you're delivering to, but actually a different address that you're sending the bill to. And so partner functions allow us to differentiate things like sold to party, shipped to party, payer, bill to party. Notice those are mandatory. Every sale that goes out, we have to have those listed. Now, the sales that you have done for your lab have pretty much all had you fill in the sold to party, and then because nothing was set different for any of the others, that was assumed to be universal for these four. So we can do that. We could specify just one of these, and if nothing else is specified, it's assumed to be the same for all. But this does give us the ability to differentiate this. And notice even we can differentiate who we send the bill to from who actually pays us. And so we have those four partner functions that have to be specified in terms of every sales order. Then we have these things right here. These are all things that, keep in mind we're talking about sales here, would fall in the category of what is often called CRM Lite. Remember way back at the beginning of the semester, we talked about how companies could have customer relationship management systems. And a full-blown customer relationship management system is going to allow us to track all kinds of information about our customers. Maybe, for example, we're a company that still sells by having salespeople that go out in the field and meet with customers. Well, that salesperson could use a CRM system to keep track of all kinds of stuff about a customer that they're selling to. I know some salespeople in the past. I don't know if any of you have ever interacted with anyone like this, but I've known, for example, some car salespeople that when they sell you a car, they try and find out as many facts about you as they can so that they can use that not only to make that one sale, but to try to get you to buy from them again. And in the olden days, used to do that by having like a deck of index cards. And so a salesperson, you can imagine they call on a particular business over time and they find out that, oh, by looking on Bob's desk, they find out that Bob is married and has 2 kids. And they're in one week and Bob mentions, yeah, my son Bobby was playing baseball last week, blah, 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 blah. And so that salesperson, as soon as he leaves his office, writes down, has a son named Bobby. And just over time, they try and find out more and more facts and keep track of all that. I've had salespeople before send me like clippings from the newspaper. I've had them send me birthday cards, just all kinds of stuff that some salespeople will try and do just to remind you that they still exist. Even though the world has gotten a lot more high-tech today, something that a lot of salespeople still rely on as a method of selling a lot of products. So in a full-blown CRM system, we can literally keep track of things like every time we talk to someone, every piece of mail we've sent them. A lot of CRM systems will let a salesperson go in and see a catalog of every piece of mail that was ever sent to a customer and can look at it to know, okay, well, we sent this customer this promotion, so when I talk to him next week, I can ask him if he found out about it, if he's interested in it. This CRM facet of a full-blown CRM system can really give you a lot of power and a lot of ability to track things and a lot of ability to do analytics across customers. Basically enables salespeople to better prioritize their time. Well, we don't have full-blown CRM support in an ERP system. If you want all the bells and whistles I just talked about, buy a CRM system. But we do want you to be able to do a little bit of that in the ERP system. And so that's what these other aspects of partner functions allow us to do. We can keep track of, for a given company, who are all the different people we've talked to. What are their names? What are their phone numbers? And we can just kind of keep a list here. The idea being that if I've always dealt with Bob, and one day Bob retires and I don't know anyone else in that company, that could hurt my ability to sell to them effectively. So a lot of salespeople, they try and get to know everybody they possibly can. Secretaries, janitors, salespeople, sales managers, buyers, whatever. We can collect all of that information in terms of partner functions. And including other things, this ... basically is, if there's other stuff you want to collect, you have places even to type in just like free-form text comments. So partner functions associated with a customer is where that would actually go. So that's a part of the customer master data record. Questions about this? All right, so we talked about the material master and the customer master. Next up, customer material information record. We saw this concept before. This is the intersection of data for one customer and one material. And what this gives us the ability to do is to supersede, if you will, the generic data that's in the customer master and the material master. So as we think about this, where have we seen this kind of thing before? In what process? What's the only other process we've talked about in detail? That would give you a hint. Procurement, so it's probably we saw it there, right? All right, so we saw this in the procurement process. What did we see in the procurement process that was an example of this? For people that are listening in the recording, everyone in the class just shouted, and it didn't get picked up because they all know this so well. They all shouted, purchasing info record, okay? Remember this guy right here? I hope you do. Purchasing info record. And what was a purchasing info record? This was the intersection of a material with a vendor that we purchased it from. And it gave us the ability to track information that would be unique about our buying just that given material. Well, same exact concept here, but notice the name is different, okay? It's kind of a non-uniform naming convention. In purchasing, we call it the purchasing info record. Therefore, it would make sense if this were called the sales info record or the fulfillment info record, but it's not. This one's called the customer material info record. So what it gives me the ability to do is cross-reference a given customer and with a given material. We talked about this concept before. For example, we sell a product with material code XL123, but our customer, when they send us purchase orders, they want to call this M28. And so we can make that happen. All we need to do is create a customer material information record and say, hey, our XL123 is going to be coded by this customer on their purchase orders as M28. Maybe we also have a situation where we always sell this product in boxes of 24. But for whatever reason, this customer is really, really special and they need us to box it up differently. And we'll do that. We'll do that just for that product, just for that customer. Where do we record that? We record that in the customer material information record. This, for example, gives us the ability to have different tolerances, different delivering plants, different shipping, things of that sort, just as it relates to one material and a given customer. So this is where we keep track of kind of exceptions. If a customer, for example, told us, we do not accept partial deliveries except for these two products. For these two products, yeah, partial deliveries are fine. How do we handle that? Two customer material information records. One for the customer for one product, the other for the customer for another product. The customer tells us, we always want you to ship us our products by way of rail car. But for this one product, we want you to overnight express it to us because maybe it's perishable or whatever have you. So we do those kinds of exceptions on the customer material information record. Maybe an alternate delivery plant. Maybe we always deliver from a given plant for a given product, but this customer wants something a little bit different, and so we ship it to them from an alternate plant. Maybe we ship it alternate shipping terms, methods, alternate packing, alternate tolerances, alternate partial deliveries, whatever have you. If a customer ever says to us, okay, normally we want you to do this, but for these materials or for this material, we want something different, this is where that goes. The customer material information record gives us the ability to do that. And of course, depending upon the demands of our customers in our given industry, this could be something we use a whole lot, or it could be something that is not part of something that we do with regularity. But this gives us the ability to actually do that. So customer material information record, another key master data element in the sales process. Yes, sir.
Did you have multiple records for each material, even if it was you had one customer which had them wanting specifics for multiple materials?
Yep.
Have a separate record for each?
You would, yes. You absolutely would. And just because we had one for some materials for a given customer doesn't mean that every material we sell to that customer has one. Other questions? Next piece of master data, the conditions master. We've talked about prices before, so we're looking at this now from the perspective of selling it versus buying it. And the idea here, of course, is the conditions master is going to have our prices on it. So what do we sell this for? And this is where, of course, we can create these very, very detailed, as much or as little as we want to do, pricing schedules and condition rules. So, we could have customer-specific pricing. We, of course, would need to define things related to how we charge for freight. We would have Incoterms here that specify when they need to pay us, what kind of discounts they get. We can specify surcharges and other things of that sort. So the idea here is the customer material information record allows us to define things as it relates to the logistics of working with a particular customer. But if we offer special pricing to a different customer, all of that would go into our condition master. And you can imagine this is a very, very detailed record, very, very detailed master record that could apply a whole bunch of rules in deciding what kinds of prices we grant. And we can keep this as simple or as complicated as we want to. Used to be, in the old days of back when everything was done with catalogs, companies would print product catalogs but not put prices next to anything. Partly that was so they could use that catalog for a long period of time, but another part was different customers pay different prices. So you would actually get a catalog and then a pricing sheet as two separate documents. And a lot of companies would do things like, some of this has kind of fallen away in current practice, but they would send you the pricing sheet on like red paper, dark red paper, because you couldn't photocopy dark red paper, and they didn't want you making copies of this and sharing with anyone else. And so you'd get as two separate things. You'd get the catalog and then your price list, which may be different than other customers' price lists. Well, this is now the electronic version of this. You can imagine the nice thing about this now is let's say we want to link our ERP system to a web-based online store. Customers log in, and the store can pull the dynamic pricing schedule associated with a particular customer because of these rules being defined in the conditions master. And so very, very important part of the selling process, because customers really do want to know what it is that they're going to have to pay. I would go back to what you did in ERP SIM. And you'll recall, I trust that you had a transaction where you would go in and set prices. And the way it worked in ERP SIM was you could set prices based on different distribution channels. You could set a price for distribution channel 10, 12, and 14. But you should also recall you could not set different prices on north versus south versus west. Well, if we wanted to be able to do that, we could service that. Maybe that would be different sales organizations. And so we could have sales organization west, sales organization north, and so on and so forth. And we could set prices that would say, okay, if you're buying in distribution channel 12 in the south, here's your price. So once again, as sophisticated as we want to be, ERP SIM kept that really, really simple for the sake of making the game simple to play. But that's not because ERP is in any way limited. We can get really, really sophisticated with this. And you see people out there really whose full-time job is to manage this for companies to make sure that their pricing schedules are reflective of what they want them to be and to maintain all of these records. Questions? All right, well, continuing on, output conditions. Output conditions are master data related to the selling process, and output conditions just tell us basically how we communicate with our customer. In particular, how we have official communication with our customer, meaning that the customer requests a quotation. Okay, in what format do we provide a quotation to this customer? The customer sent us an order. How do we confirm it? How do we send this customer invoices? And we can do that through U.S. mail. We can do it through faxing. We can do it electronic data interchange. We can do it through email. And so the nice thing about this is if we're set up to do this, the customer could send us an electronic request for a quotation, and we could have the system reply with a quotation, all done through email in a matter of minutes. But we have to set this up and decide how we're going to communicate with a given customer. So what's going to be specified here is what's the output type, what's the medium, you know, we're some things we might fax, whereby other things we send actually in hard copy via email. When do we want this to go out? Do we want this stuff to go out immediately, or do we want to just send invoices every Friday or whatever have you? And then we can pull from the partner functions here, because the partner functions here are going to tell us, okay, we shipped it to this address, but we send the bill to this other address. And so we pull from those partner functions to understand various facets of routing. And this is something that we would have the ability, therefore, to control on a per customer basis if we wanted to, where, you know, maybe everybody wants us to do it via email except for one old school company, and when they buy from us, they want us to mail them everything because they don't have a fax machine and they don't use computers. Okay, we can do that. We set that up in output conditions. We don't do any of this in our lab work. I've done it once before. It is not the most exciting thing to do, but you can actually go in and in the SAP GUI create a document. and you do it using something called SAPscript. And it's kind of like a scripting language for document creation. In the old days, you really don't hear too much about this, but Apple created a standard a long time ago for printers called PostScript. And you used to see with laser printers, like in the documentation, it would say PostScript compatible. Well, the really cool thing about PostScript is it was a programming language. And if you knew how to write that programming language, you could write a program that when you sent to the printer would actually output what you told it to print. So, you could write a PostScript command and give it dimensions for drawing a triangle and drawing a box. And you could do all kinds of stuff. It wasn't like creating a document using Word, where it was what you see is what you get. You actually wrote a computer program that generated a document. And what companies used to do with PostScript is they would write a script that would say, okay, put a border around the document and put our logo here and print the word invoice at the top. And they would have PostScript that would kind of create the format for it. And then when you actually printed one of these out, it would run that for creating the background, and then it would put the actual data on top of it. Well, this is the SAP equivalent of that. You can, in SAPscript, go in and actually design your documents. You have some templates to work with, but you can go in and customize this and actually be able to print this out. Now, what this does for you is, here's a term you may have seen before. This gives you what is called pixel perfect output. And the idea by this is, keep in mind we're talking about selling here. So this could mean we're talking about sending invoices or bills to customers. And you want all of your bills to look exactly the same. Because, a bill should look the same. You can imagine, you get bills, you get credit card bills, statements from the university, whatever have you. Sometimes they're printed on pre-printed forms. Sometimes the whole form is output when it's created. But what SAPscript gives you the ability to do is actually define a document to the point that every bill is going to look exactly the same. If you held 3 of them up back to the light, everything would look identical except the specific numbers. That's what we can do with SAPscript in creating this pixel perfect output for our official documents. It's just kind of one aspect of being able to distinguish a professional company from one that's not so professional. My landscaping company sends me a bill every month, and it looks like they use QuickBooks. And it's nice. They send me a bill. It's not like the most elaborate bill I've ever gotten, but at least it's a bill. My trash removal company is literally a company that is a husband, a wife, and a son, and a trash truck, and a small garage. And I get a bill from them that looks like it was maybe copied on a copier that was bought sometime in the 1980s, because it's fuzzy and gray, and it just tells me I owe money to pay, but it's not exactly real hyper professional. Well, this gives us the ability to make sure our output looks exactly like we want it to. Comments or questions? Last piece of master data, credit management master record. Credit management master record, we talked about this is an extension of the customer master record. It's going to have general data at the client level, and this is going to give us the address, the communication information, and what their total credit limit is at the enterprise level if one has been set at the enterprise level. Then we have what's called the credit control area data, which is at the credit control area level, which allows us to set a credit limit for a given credit control area. Now, I had some slides I skipped over because we talked about them last time and I drew a picture. But let's just try and illustrate this, where here's the client, and here's company code 1, company code 2, and company code 3. And it just so happens that in our organization, we set a credit limit at the overall enterprise level, and let's say for a given customer, it's $50,000. But Company Code 1 has their own credit control area, and they set a credit limit, and let's assume that they set their limit to $20,000. We can do that. Now, what this means is the customer hasn't bought anything from us. They call us up and place an order with Company Code 1 for $20,000. Well, at that point, their credit at Company Code 1 is maxed out. They can't buy anything else from Company Code 1 on credit, but they can buy from Company Code 2 and 3, but they can only buy $30,000 more stuff because the $20,000 with Company Code 1 goes against that. Now, if we start from scratch again, they order $10,000 from Company Code 3, $10,000 from Company Code 2, and then they want to order $10,000 from Company Code 1, that's fine. Because that $20,000 limit, basically, whenever the customer places an order, we check to see, are they over our enterprise level limit? And if they're not, then we say, okay, do we have anything more specific than that? And we check the rules against that as well. We may not do both of these. We may just have enterprise level checking. We may just have company code level checking. And we can do things like put these two together and have that be a credit control area where they would say between the two of us, you can only do $30,000. So we can get as nuanced with this as we want to. All of that is going to be reflected in this credit management master record. And when we start stepping through the process, you'll see how this comes into play and how we actually check on things. Bless you. Questions? All right. In looking at what we have coming up, and in looking at the clock on the wall, which is slow for some reason, I think this is a good place for us to stop for today. So we will be done. If you have not already done so, please make sure you come up here to the front and sign in for today. I hope all of you have a great weekend, and I will look forward to seeing you when we get together next week.